If you are holding XRP right now, you might not fully understand how close we are to a serious institutional shift. While many retail investors are watching price candles move up and down, something much bigger is quietly forming in the background. The world's largest interdealer broker is preparing to list XRP for institutional spot trading. This is not a small exchange listing. This is not hype. This is traditional finance opening the door. Welcome back to We Are Cosmic, where we break down crypto, blockchain, and digital finance in a simple and powerful way so you can stay ahead of the market. If you get value from this breakdown, make sure you support the channel with a like, because today we are diving deep into institutional signals that could shape the long-term future of XRP. Let's start with the biggest headline. The world's largest interdealer broker, TP ICAP, is preparing to list XRP on its institutional digital asset platform called Fusion Digital Assets. Now, why is this important? First, you need to understand what TP ICAP actually is. This is not a retail exchange like Coinbase or Binance. TP ICAP connects major banks, hedge funds, asset managers, energy firms, and commodity giants. They are a bridge between some of the biggest financial institutions in the world. When a platform like this prepares to offer XRP trading, it sends a message. XRP is being considered as a serious institutional-grade asset. Fusion Digital Assets is an FCA-registered wholesale spot crypto venue in the UK. That means it operates under regulation and is designed specifically for institutional participants. It has already processed over $1 billion in monthly volume in Bitcoin and Ethereum. Now XRP is listed under Coming Soon Assets alongside other major digital assets. This matters because institutions do not trade the same way retail traders do. They require proper custody solutions, delivery versus payment settlement models, credit-backed trading, and no pre-funding requirements. Fusion is built to match how banks already trade foreign exchange and OTC products. By adding XRP, they are integrating it into a structure institutions already trust. This does not mean price will explode tomorrow. Institutional adoption is usually slow and steady, but what it does mean is that liquidity could deepen over time. Larger ticket sizes, tighter spreads, and more reliable two-sided markets typically come with institutional venues. That creates stronger price structure and healthier markets long-term. There is another layer to this. Fusion is also positioning itself for tokenized markets and on-chain financial products. If XRP is whitelisted early on this platform, it could eventually be used as collateral or as a bridge asset in tokenized FX and other blockchain-based financial products. That shifts XRP from being just a traded token to potentially being part of settlement infrastructure. And that is the key difference. Retail listings bring hype, institutional listings bring infrastructure. Now let's zoom out. At the same time, Ripple has announced that over $550 million has already been deployed directly into the XRP ledger ecosystem since 2017. This is not marketing. This is capital invested into builders, developers, startups, and real-world use cases. We are seeing two parallel developments happening together. On one side, institutional trading infrastructure is forming. On the other side, ecosystem funding and development are expanding globally. When infrastructure and development grow at the same time, that is usually when long-term value is built. Many people focus only on price, but price is the last reaction. First comes infrastructure, then comes liquidity, then comes use case expansion, then eventually price reflects fundamentals. Right now, XRP is positioning itself inside regulated trading venues, tokenization growth, and institutional payment systems. Whether you are bullish or skeptical, you cannot ignore the signals. Continuing from where we left off, the story of XRP isn't just about trading and liquidity. It's about building a real ecosystem that can sustain institutional and retail adoption alike. And that's where Ripple's latest announcements become extremely important. Over $550 million has already been deployed into the XRP ledger ecosystem since 2017. This is not just a number. It's a reflection of years of strategic investment aimed at creating a thriving global digital finance network. Let's break it down. Ripple has focused on building a multi-layered support system for developers, entrepreneurs, and institutions. Historically, much of this funding flowed through Ripple's direct initiatives such as XRPL grants, hackathons, and accelerator programs. These programs help nearly 200 projects worldwide, covering areas like DeFi, payments, tokenization, AI, gaming, carbon markets, and enterprise financial applications. Think about it. That is a significant number of real-world use cases being built directly on XRP Ledger. This shows a clear commitment to infrastructure, not hype. But 2026 is a turning point. Ripple is moving toward a more distributed, community-driven model. This means that independent organizations, regional hubs, venture partners, and community-led initiatives will play a larger role in funding and supporting builders. In practice, this gives developers multiple pathways to scale their projects rather than relying solely on Ripple as the gatekeeper. The goal is simple but powerful. Create a healthier ecosystem where innovation is not bottlenecked by central control and the network grows organically. Several new programs reflect this shift. The FinTech Builder program is aimed at high-quality, institutional-grade applications, including stablecoin payments, lending rails, tokenization, and regulated financial services. It provides hands-on support from design to production, a level of guidance that is rare in crypto. Then there's ZaoDAO, which introduces micro-grants, community voting, and funding proposals in a decentralized format. XRPL Commons continues to act as an independent hub, while initiatives like XRP Asia and UDAX focus on university pipelines and expanding development in APAC. Together, these programs are creating a global network of innovation and funding channels for the XRP Ledger ecosystem. Why does this matter for holders? Because the growth of real-world use cases directly impacts long-term demand for XRP. Each project funded, each new application built on the ledger increases the probability that XRP becomes essential for payments, settlements, or tokenized financial instruments. It's not just speculation, it's structural adoption. Another important aspect is Ripple's commitment to tokenized assets. Over the past few years, tokenized treasuries have grown from virtually nothing to over $10 billion, led by institutions like BlackRock and Circle using RLUSD. This isn't just digital representation. It's instant 24/7 liquidity that previously took days to settle. Ripple and XRP are positioning themselves as the bridge between traditional finance and blockchain utility, which could accelerate institutional adoption even further. At the same time, Ripple's partnership with SBI Holdings and SBI Ripple Asia shows that the ecosystem isn't limited to one region. Tokenized deposits, programmable cash, and security token initiatives in Japan demonstrate how XRP can integrate with traditional banking and settlement systems. This level of adoption speaks volumes about XRP's potential to operate within real-world financial infrastructure, not just speculative markets. In short, Ripple is not only funding builders, but also creating the plumbing for XRP to become a go-to asset for institutions globally. The combination of strategic funding, distributed support models, and global adoption is forming a foundation that could dramatically increase XRP's utility and eventually its market relevance. Now that we've covered Ripple's ecosystem investments, let's circle back to institutional adoption, because this is where XRP could really start moving from being a speculative token to a functional financial instrument. TP ICAP's Fusion Digital Assets platform is not just another crypto exchange. It's a wholesale, FCA-regulated venue designed specifically for banks, hedge funds, and large institutions. That's a different ballgame entirely compared to retail exchanges like Binance or Coinbase. Fusion is already processing over $1 billion in monthly Bitcoin and Ethereum volume, which tells you that it's a trusted platform for serious market participants. Now, XRP is listed as a coming soon asset. Why is this so important? Institutions need credibility, liquidity, and regulatory compliance before they move large sums of money. Fusion delivers all of that. It offers delivery versus payment settlement workflows, is custody agnostic, and supports pre-existing credit lines. This means that banks and funds can trade XRP the same way they trade traditional FX or OTC products. From a market perspective, adding XRP to an institutional venue like Fusion has several implications. First, it can deepen liquidity over time. Larger ticket sizes and more reliable two-sided markets usually come with institutional venues, which can reduce spreads and make price discovery more stable. Unlike retail markets, where large buy or sell orders can swing the price significantly, institutional venues absorb size efficiently. For XRP, this could mean smoother trading conditions and a foundation for long-term growth. Second, Fusion is positioning itself for tokenized and on-chain financial products. By being whitelisted early, XRP could serve as collateral or a bridge asset for tokenized FX or other digital financial instruments. Imagine XRP not just being traded as a token, but actually being used as a backbone for settlement infrastructure. That changes the narrative entirely. It's no longer about speculation, it's about utility in a regulated financial system. Another critical aspect is integration with existing institutional workflows. TP-ICAP already intermediates flows between banks, energy firms, and commodities traders. Adding XRP allows these institutions to route size into XRP without learning a new system. They can use the same connectivity, OMS integrations, and credit facilities they already trust. This is a huge advantage because the barrier to entry for institutional adoption is often operational complexity. Fusion minimizes that barrier. Let's also talk about liquidity signaling. Even though retail markets may not immediately reflect this, institutional listings typically bring tighter spreads and more two-sided markets, which strengthens the overall ecosystem. Over time, this encourages other institutions to participate. Liquidity begets liquidity, and as more institutions adopt XRP through regulated channels, it reinforces the token's position as a serious financial asset. Beyond trading, there's the broader institutional impact. Fusion's move aligns with the larger trend of tokenization. On-chain FX, security tokens, and programmable money are all gaining traction. XRP being part of this infrastructure positions it as a preferred token for institutional use cases. It's not a guarantee that price will explode overnight, but it does mean that XRP is now part of the strategic infrastructure layer in finance. Finally, this listing combined with Ripple's ecosystem funding creates a unique synergy. On one hand, we have institutions gaining regulated access to XRP. On the other, builders and developers are creating applications and solutions on the XRP ledger. When infrastructure and adoption grow hand in hand, that's when a crypto project moves from speculation to real-world utility. Now that we've covered the institutional listing at Fusion, it's time to look at how Ripple is connecting XRP to real-world financial systems through global partnerships. These collaborations are what separate XRP from most other digital assets. They are not just marketing alliances, they are functional integrations that expand XRP's utility across borders. One of the most significant partnerships is with SBI Holdings and SBI Ripple Asia. These organizations have been actively exploring blockchain solutions for tokenized deposits, bonds, and other financial instruments in Japan. Their recent initiatives include the DCJPY platform, where deposit tokens are issued for settling security token transactions on platforms like the Osaka Digital Exchange. These tokenized deposits simulate real-world settlements and demonstrate how XRP can integrate with regulated banking infrastructure. This is a critical step because it shows that XRP can work within legal and compliance frameworks, not just in crypto-native ecosystems. Ripple's collaborations are not limited to Japan. For example, BNY Mellon has explored tokenized deposit services using the XRP ledger, while Citi has integrated programmable cash and smart contracts for cash management and trade finance. Even Ripple Prime, an early adopter program, supports these institutional applications. Each of these partnerships demonstrates that XRP can scale beyond speculation, functioning as programmable money and as part of institutional settlement infrastructure. This ecosystem is also tied closely to Ripple's RLUSD stablecoin, which enables 24/7 instant liquidity. Traditionally, settling transactions for tokenized assets could take days. But with RLUSD and XRP, these settlements happen almost instantly. This speed and reliability are key for institutional adoption, particularly for large-scale trades or tokenized asset settlements. For example, tokenized treasuries have exploded from nearly zero in 2023 to over $10 billion in recent months, led by firms like BlackRock, Circle, and Franklin Templeton. XRP, in combination with RLUSD, acts as the liquidity backbone for these institutional flows. Another layer is the technical infrastructure of XRP Ledger itself. While XRP's on-chain speed of 1,500 transactions per second is already impressive, the real power comes from payment channels and the Interledger Protocol, ILP. Payment channels allow organizations to process trillions of transactions per second if needed, while ILP enables streaming payments across ledgers. This combination is critical for supporting a global digital finance network, especially as AI-driven financial applications scale and require billions of microtransactions per second. The adoption metrics are also encouraging. XRP locked in institutional ETF vaults remains above 800 million tokens, suggesting that long-term holders and institutions are staying the course despite temporary market fluctuations. Meanwhile, growth in tokenized products and stablecoins indicates active economic use, not just speculation. When the same XRP or RLUSD moves multiple times across the network, we see velocity, the true measure of adoption, rising. Higher velocity means more economic activity per unit of liquidity, which is a clear signal of real-world usage. In summary, Ripple's global partnerships are bridging the gap between traditional finance and blockchain technology by connecting banks, asset managers, and institutions to XRP and tokenized assets. Ripple is positioning XRP as the programmable, settlement-ready backbone for future financial systems. This is not hype. It's structural adoption and a real expansion of XRP's utility. Continuing our deep dive, let's focus on the emerging financial instruments that are rapidly changing the landscape for XRP, RLUSD stablecoins, and tokenized treasuries. These are not just technical innovations. They are practical solutions that make XRP and the XRP ledger central to next-generation finance. Over the past few years, tokenized treasuries have grown from almost nothing to over $10 billion, with institutions like BlackRock, Circle, and Franklin Templeton leading the charge. What makes this growth remarkable is speed and liquidity. Previously, settling such assets took days, sometimes weeks. Now, with Ripple's RLUSD stablecoin, these settlements happen instantly, 24/7, transforming how large institutions move capital. XRP acts as a bridge asset, enabling rapid settlement while maintaining compliance with existing financial regulations. RLUSD is designed for institutional use, not retail speculation. Its steady growth indicates controlled adoption and measured scaling. In practice, this means institutions can experiment with programmable money, tokenized assets, and cross-border payments without risking volatility or operational disruption. As these tools gain traction, the velocity of capital on the XRP ledger is increasing, an essential metric for adoption. Higher velocity shows that money is moving efficiently, creating real economic activity rather than simply sitting idle. The technical backbone supporting this is the XRP ledger's speed and scalability. With 1,500 transactions per second and payment channels that allow trillions of transactions per second if needed, XRP can handle the volume required for institutional programs. The Interledger Protocol, ILP, further enables streaming payments across different networks, making XRP a natural fit for global real-time settlement. AI-driven applications, tokenized FX, and programmable cash flows can all leverage this infrastructure to operate at scale. Another critical point is the strategic alignment between XRP and RLUSD. Institutions are now using RLUSD as a stable, programmable asset for settlement while leveraging XRP's liquidity for cross-border movement. Think of it this way. RLUSD is the steady hand, XRP is the high-speed bridge, and Ripple's infrastructure is the framework that ties it all together. Together, they form a robust system that institutional players can trust. The implications are significant for holders. As adoption grows, the demand for XRP as a bridge asset will likely increase. More importantly, this is not hype-driven demand. It comes from real-world usage, treasury settlements, tokenized deposits, cross-border institutional flows, and programmable money applications. These flows are the backbone of future financial infrastructure. Furthermore, as jurisdictions globally develop clearer regulatory frameworks for tokenized assets, the total addressable market for XRP and RLUSD could expand dramatically. Analysts estimate that tokenizable assets, including real estate, debt, and securities, could represent trillions or even quadrillions of dollars. XRP is positioned to become the digital backbone of this emerging system, connecting tokenized assets, programmable money, and institutional liquidity. Lastly, keep an eye on market sentiment versus fundamentals. Institutional adoption and liquidity growth are structural factors that will eventually outweigh short-term market sentiment. Even if the price fluctuates, these developments are laying the groundwork for long-term sustainable growth. Now that we've broken down Ripple's ecosystem funding, TP ICAP's institutional listing, global partnerships, and RLUSD tokenized treasury adoption, it's time to look at the bigger picture. What does all of this mean for XRP holders and the future of finance? The answer is that XRP is positioning itself as more than a token. It's becoming a core financial infrastructure asset. First, consider the synergy between institutional access and ecosystem growth. On one side, TP ICAP's Fusion platform is creating a regulated custody-agnostic venue where banks, hedge funds, and asset managers can trade XRP confidently. This increases liquidity, tightens spreads, and improves price stability. On the other side, Ripple has deployed over $550 million into the XRP ledger ecosystem, funding builders, startups, and decentralized projects. When infrastructure and real-world applications grow in parallel, the assets supporting them, XRP, becomes more than a speculative tool. It becomes an essential utility for a functioning financial network. Second, global partnerships amplify this effect. From SBI Ripple Asia in Japan to BNY Mellon and Citi in the US, Ripple is demonstrating that XRP can integrate seamlessly with existing banking systems. Tokenized deposits, programmable cash flows, and smart contracts are no longer theoretical. They are being tested and deployed with regulated institutions. This positions XRP as a trusted bridge between traditional finance and blockchain innovation, a role that very few cryptocurrencies can claim. Third, the growth of RLUSD and tokenized treasuries shows how XRP can support high-volume, high-speed institutional transactions. With settlements that used to take days now happening instantly, XRP is proving its value as a liquidity backbone. Payment channels and the Interledger protocol ensure that the system can scale to billions of transactions per second if needed, making XRP a natural choice for future financial applications, including AI-driven systems, tokenized FX, and global programmable money. Another crucial factor is network velocity. Real adoption is measured not just by token supply, but by how actively it is used. XRP's growing velocity indicates that it is increasingly being utilized for real economic activity. This is the kind of fundamental adoption that creates long-term value far beyond short-term price movements or retail speculation. From a strategic perspective, XRP is being positioned for a future where institutional, retail, and blockchain-native applications coexist. TP-ICAP and Fusion provide regulated trading access. Ripple's funding ecosystem fuels innovation and real-world applications. RLUSD and tokenized treasuries ensure liquidity and speed. Global partnerships demonstrate legal compliance and operational integration. Combined, this forms a robust, multi-layered financial network with XRP at the center. For holders, the takeaway is clear. Don't just watch the price candles. Look at the structural adoption and infrastructure growth. XRP is quietly building a foundation that could support trillions in tokenized assets and programmable money flows. The real story is about utility, liquidity, and integration, not hype or short-term volatility. In conclusion, XRP is no longer just a cryptocurrency. It's evolving into a digital settlement layer, a programmable money platform, and an institutional-grade bridge asset. From Fusion listings to Ripple's global ecosystem funding and RLUSD integration, every development points toward a future financial system where XRP plays a central role. As a holder or investor, this is the moment to watch long-term fundamentals, understand adoption trends, and recognize that XRP's journey is about building real-world infrastructure, not just chasing price gains. The institutions, partnerships, and technology are all lining up, and the XRP ledger is at the center of this unfolding financial revolution. If you've enjoyed this analysis and found it valuable, make sure to like, share, and comment below. We'll continue breaking down crypto developments in ways that are simple, insightful, and actionable. Welcome to the future of finance, and welcome to We Are Cosmic.